What's up, Mortgage Coach? Dave Savage, CEO of Mortgage Coach, and it is 2019. This is officially my first interview of 2019, and I can't think of anybody better than Wally Elibiary. What's up, Wally?
What's up, man? Hey, I appreciate you having me. Believe it or not, I think it was the first interview in 2015 also. So,
Yeah?
I think so. Somewhere around, no, first or second. I think, who was it? God, who wrote Entrepreneur Roller Coaster? Darren Hardy.
Darren Hardy.
Yeah, Darren Hardy, I think, might have been right in front of me. And I was like first or second around that same time.
Yeah, and that interview with you is an all-time great because I think it was the first time I interviewed you,
Yep.
and I learned that you coach realtors, and I can't remember exactly what we called it, but it was, it's how to be a coach and leadership as a unique competitive value proposition. And by the way, I'm going to put a link down below. It is one of the all-time best Mortgage Coach interviews, and it really showcases all the things that make Wally special. So check that out, guys.
Thank you.
Yeah, no, thank you for being such a great leader in our community. So I want to do two things here because we kicked off last year, you talking about how you wanted to increase the business you got from your past clients. You wanted to, improve the profitability of how you do business in addition to improve production. And so I want to just hear how things went, with your, annual review initiative and your past customer initiative. And I just want to talk about what you're doing new for the new year. So before I ask the question about the new year, 2019, tell us about 2018 and what went well.
Yeah. So it's, this year is my 21st year in the mortgage business. So clearly I'm a slow learner. And what I mean by that is I've always worked really hard. And a lot of people told me, hey, you got to work smart. You got to work smart. Unfortunately, I've just finally figured that out, how to work smarter. And basically what I'm trying to express is 2017, I personally did $80 million of production. The year before that, I did roughly about $100 million. But that $80 million in production in 2017 was 4% from past clients. 4% from past clients. That's a very horrible number. The 80 million is cool, but the 4% was really weak. I came back, I talked to Dave. We're at Sales Mastery, Todd Duncan's place in San Diego the year before. And, he challenged me, and Dave challenged me, and Duncan challenged me. And the biggest thing was simply that, if I get one referral from each past client, or if I get one referral from a client in process, you can literally candidly double your business every year, if not every other year. I wasn't looking at that. So we came back, we focused on it. And the biggest takeaway I want you to have is we went from 4% of past clients to 2018, did about 75 million in production in 2018, but 31%. So from 4% to 31% of past clients from our annual mortgage review campaign.
Excellent. Love that. And didn't you go from, I think you were like 40-ish past client loans in 2017, and you were 80 something in 2018. What were the actual numbers, if you know them?
Yeah, so I think the closings came out to, I'll give you kind of a breakdown of the numbers. So we took our last 3 years worth of closings, which was 982 clients. 982 clients I've closed the loans for. I cashed the commission, and I never talked to them afterwards. If I ever did a loan for a past client, it's because they called me or reached out to me through Facebook or whatever the case. So from there, we walk you through how we got a hold of those clients. But I was able to do 601 AMRs, annual mortgage reviews. So from 982 to 601. Then from that 601, 398 picked up the phone. So from 601 called, scheduled by my assistant, and only 398 picked up the phone. I found through those 398, 171 opportunities. So that meant someone looking to purchase a house, another house, an investment property, or another home, looking to purchase a second home, looking to refinance an investment property or a primary residence, other opportunities there. And also from there, it also included referrals to my CBAs, financial advisors, and family will attorneys. So 171 opportunities. And from that, we got 131 applications, which I think was a great ratio. 131 applications. And then we closed 82 closings from those 131 applications. So you kind of see how everything, that funnel starts coming down. So, I mean, that 82 closings, that was $23 million of my $75 million that is closed. The biggest thing I want you to understand is that all my agents, majority of all my agents were about 20, 25, 30% less production this year. So if all my agents are doing less production, then I would personally do less production. What saved my tail this year was Mortgage Coach, annual mortgage reviews, and the challenge that Duncan and Dave gave me, which was really, really got me in that direction. I explained
Love
that well?
that. You did. So I want everybody to get this. So he would have been down over 20% because his agents were down, but you shifted. And by the way, not only did it save your year, but all of those relationships are now you trained them to refer you business. So you've taken control of your mortgage practice. And I can assure you it will only grow and grow and grow. And I can assure you those are also more profitable relationships, less likely to grind you. I mean, think about it. If you delivered 5-star service, you did a great job with them. Now they're repeat customers. They're even less likely to rate shop, convert, go with some other online lender, have to give price exceptions. So it's more profitable business. So
also, I mean, if you look at like my regular purchase market business, 13% of every contract that one of our clients get, we lose 13%. So we capture 87% of every contract, but that 13% of clients go to another lender, an online lender, Zillow Mortgage, whoever. Then from the annual mortgage review clients, those 82 that I closed, we only lost one, and it was simply because their brother got in the mortgage business. But to me, it was a lot less competition, a lot easier business to get, and there were more profitable loans to get.
Love it. So guys, I kicked off 2018 saying your number one priority is your past customer database. And if that's true, your number one priority is annual reviews. We're going to do a replay. 2019, that is the number one priority. Again, assuming you're a referral-based local loan officer, if you live on referrals, if you rely on a local market, this should be your number one strategy because it's profitable production. And by the way, did you also hear, not only did Wally get loans that he closed, he got referrals to bring back to all of his local referral partners. So again, he's just creating this Amazon-proof mortgage business. So even if Amazon gets in the business, even if Zillow kills it with realtors, Wally is, bulletproofing his business. So Wally, obviously you're big on Mortgage Coach. Before I get into 2019 and what's different, I just want to make sure we really drill down on what you did this year or last year to kill it. Describe how you're using Mortgage Coach. And then I know we have an actual sample that we want to pull up and walk people through. Describe when you're using Mortgage Coach and how you're using Mortgage Coach, and then we'll get into 2019.
Yeah. Do you also want me to kind of go over simply what technology we use to capture those clients with annual mortgage reviews and any of that stuff?
Yeah. Let's do it. We want to break down your process for everybody.
Unfortunately, I doubt I'm the only person out there in the world that this happened to. But the biggest thing I want y'all to know is if I took 982 past clients, we took a lot of people look at a big database like that and they say, hey, that's just too many. I'm going to go for these 50. The way that we're able to have 601 conversations from 982 past clients is we took 20 clients on a daily basis, Monday through Saturday. 20 clients on a daily basis that my system, a technology that we use through Jingo, sent them out a slide dial voicemail. That's a ringless voicemail. That's me saying, hey, I just wanted to connect. I owe you a big apology. I have not talked to you since closing. I'm really, really sorry for that. However, I've got your mortgage here right in front of me and I wanted to help you kind of analyze it. And I see some gaps that you can pay more principal and less interest. So I'd love to have a conversation with you. Please call me back, da-da-da-da. Well, if they call back at da-da-da number, that's not my personal cell. We use something called Ring Central, which is a cloud-based software. And it's where they can call back and it goes directly to my assistant. His script was simply, hey, I'm really sorry. Wally just walked into a meeting. Now, I've got his calendar up right in front of me. It was really important that he get a hold of you because he sees some great ways he can help you. Wally's open this afternoon at 3 o'clock or tomorrow morning at 10 a.m. What's better for you? What was so great about that is I'd walk in every morning. I'd have 5, 6, 7 appointments on my calendar, and they were completely there, scheduled. We use Schedule One software, which is it sends them a text 30 minutes before, the hour before, and a day before, the day previously, letting them know that we'll be calling and connecting. So now, if they didn't call back, or they didn't leave a voicemail back, or they didn't send a text back, a video text would go out to them an hour later. So that's 20 of them per day. Hour later, that would go out. And what was great about that, that was a video text, max 15 seconds. Technology we used was Agent Legend. And that max 15 seconds, that was me saying, hey, did you get my voicemail that I left you? I'll send you an email if we don't connect. Then we'd send them a bomb video email, which was the technology that we use an hour later. And that's where just me and one single assistant handled 982 past clients and got 601 on the phone. So the biggest thing I want to help you understand is you can use technology as your partner through this and sift through your database if you haven't been able to contact them. Instead of the old days, I would have just gone number, name, and just called one by one. Did I explain that okay, Dave?
You did. And I just want to put a footnote for folks that for all you Jingo users, there's now, you can automate the Mortgage Coach annual review in Jingo. So if you have Jingo and you're not using the Mortgage Coach integration, email support to have them activate it. And if you're not using the automated annual review feature, check it out. We're just doing everything we can to do that. Also, I'm going to share my screen real quick because I want to do a shout out for two things. One, I want to walk everybody through one of the scenarios you did, Wally. But two, I want to draw your attention to the Mortgage Coach Facebook group. So, Mortgage Coach Productivity Mastermind, I'm going to post this interview to that. And if you have a question for Wally, like if you didn't connect the dots on some of the things, post your question below. And then I also want to draw attention to this question I currently have in announcements. And it's two important questions. How many past clients do you have? And how many past clients did you close a loan for in 2018? You'll notice that Wally took his past customer pull-through rate from less than 5% to almost 10%, which, by the way, that is the metric. So I just want to, in this call, please, first of all, share where you're at, in comments here. Let us know that, hey, I've got X number of past clients. I closed this many in 2018. And even put your goal. And my goal for 2019 is X. So I'd love to see a lot of comments in this post because one of my goals is to have a lot of Wally success stories at the end of 2019 where we've, through using Mortgage Coach at the point of sale to, help the client make a better decision and then using it in the annual review, you're optimizing your past customer database. So Wally, anything on that before we get into a specific strategy and story?
Yes, absolutely. I'm always a creeper on that page, looking at different posts. I get a lot of ideas from that page, and I'd highly recommend if you ever have a question, hey, I'm struggling with A, B, and C, just jump on that page, post the question, and you're going to get a lot of information back. If you're struggling with something, just, hey, I'm struggling with A, B, and C in the mortgage business, just jump on there, and you'll get a lot of feedback on it.
Yeah, and by the way, you're getting feedback from some of the nation's top mortgage professionals. I mean, this is the group and the loan officers that follow this group and are active in this group. It's the nation's best coaches, trainers, and top producers. So there's just a lot of value. So Wally, I wanted you to go through one total cost analysis so that, we're training people on how to do the annual review. If you could, you recommended this one. You said over 5, but you said my favorite one is this. Tell us about this particular strategy.
Yeah, so what I did when I jumped on the call with the clients, if you can scroll down here, Dave. So what I did when I jumped on the phone with clients is when I talked about their mortgage, if they had monthly mortgage insurance, I'd help them, hey, what's your appraisal worth? And I'd reach out to the realtor. But what's great about that, a lot of these clients, I was asking, hey, have you paid anything extra towards the mortgage? And their response back was, yeah, absolutely, I have. Well, here's kind of the situation. I said, okay, so what have you paid? This gentleman right here, he was paying roughly right about $1,000 to $1,500 a month more on his mortgage. So when I was talking to this gentleman over the phone, I realized, I said, let me run some numbers there for you. If I restructured your mortgage to a 15-year fixed, that would save you, instead of paying $1,500 a month extra, you're only paying about $1,300 a month extra. So when I was able to go through this, it was a no-brainer for him to refinance because he was paying extra towards a mortgage anyway, but it allowed him to kind of see, okay, I can definitely pay off within 15 years if I save the amount of interest. And I also showed him how much interest he'd save, how many years he'd shave off his mortgage. And what's great about this gentleman is I said, now that you're going to have a lot more equity in your home, faster process, talk to me a little bit. Have you shared this news with your financial advisor? And we said, yeah, no, yes, no, not really. I said, do me a favor, Duncan. Why don't I jump on the phone with you and your financial advisor? And we'll simply go through what I'm doing where, because I would love for him to confirm, Duncan, that the way that the mortgage is being set up, it's actually more beneficial to you. So he said, yeah, we jumped on the phone with the financial advisor. And all of this came from this annual mortgage review through Mortgage Coach. 110% all this came. If I didn't have this, I had no leg to stand on. So when we got on the phone with the financial advisor, he was ecstatic. He goes, I said, did you get the link that I sent your assistant to forward to you? And he was all ecstatic about it. He goes, and on the call with the client, Duncan, he goes, we should get together and grab a coffee. And what's super cool, this happened like in November. The super cool thing is since we met, I've already got 2 referrals for them that are already pre-qualified. And one was a $550,000 loan. The other one was a $600,000 loan. I mean, to me, that's another $1.2 million that of loans that I'm able to capture just by simply doing an annual mortgage review and being brave enough to ask about the financial advisor.
Love it. And I want to remind everybody that one, you can switch the views. So, whatever is the best view for you or the client to tell the story, and remind to share it. Like in this particular case, Wally had a conversation, he delivered some options, he brought some clarity. He probably either CC'd the financial planner or had the client forward it to their financial planner. So, part of the value is he's delivering this amazing advice and he's getting this report. Think of this as personally branded advice. He's getting this personally branded advice in the hands of his clients, in the hands of their, CPAs, financial planners, and everybody involved. Anything you want to add on this before we start getting into 2019?
No, so I think that was huge. It's just, man, the silly thing is you just got to be brave enough to try it. At the end of the day, if you ask me, what was the reason I never reached out to past clients is I didn't know what to say. So I was afraid to make that call because I didn't want to sound like an idiot over the phone. The TCA, the total cost analysis, helps you, and the annual mortgage review, that helps you have that conversation. I just went down the whole entire TCA, boom, 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 boom. And that's what the conversation was about. All the numbers were completely there because we did one thing. And the most important thing that we ever did through this, if not, I would have been hosed, was simply that when we get a client that is pre-qualified up front, we do the total cost analysis up front. If we would have never done that total cost analysis on those 982 clients, I would have had none of their information whatsoever, simply because I changed companies last year. So if I would change companies, I didn't have my database. I didn't have any information. We got lucky, and the TCAs from those application process were there. And what's super cool about that, you've got all the updated information. So just make sure you do a TCA on the front end when you pre-qualify a client, so you can do the annual mortgage review at the end.
Love it. All right, guys. So let's do this. And by the way, I've interviewed a lot of loan officers. This month, January 2019. I'm going to interview a lot of loan officers that are killing it with annual reviews and past customer business. And so there'll be a link down below to my interview last year with Rick Scher. Rick's got a great process. He's got it close to a 10% annual pull-through rate. So 10% of his annual clients are 10% of his database are doing loans with him. So check it out. There's a lot of ways to be successful about this. The most important thing is you're just reaching out to your past customers. You're having conversations with them, and you're delivering a total cost analysis to help them, plan for themselves. And, sometimes it creates a loan, sometimes it doesn't. But if you do it right, it always creates a referral, and it always creates a client for life. So Wally, what are you doing different in 2019? What are some things that you've learned through the Mortgage Coach community that, it might be annual review based? I know you and I recently talked about, how to get more 5-star reviews. What are you going to do different in 2019?
Not a couple things, but a lot of things. We'll start off with, I had a talk with Gallegos and Dave. I'm not gonna butcher the.
Well, by the way, it's Dave Gallegos and Giuseppe, 2 great mortgage coach professionals. By the way, before you get into what you learned from them, I'm putting a link down below because I interviewed Dave Gallegos, and he's incredibly profitable branch, and he does a great job of, like his branch has less than 10% of their loans get price exceptions. So listen to that call down below if you want to learn how to, have less price exceptions. Dave's a leader at that. But anyways, continue with Dave.
Yeah, I mean, the biggest thing I learned that he consistently did and was simply that I went from 36 million to 45 million, 80 million to 100 million in just 4 years, but I became very transactional. I stopped being relational. It was super easy to be relational at 36 million. It was a lot harder to be relational at 75, 100 million, just simply because it wasn't my focus. So after that call, we started talking about how to do, he did face-to-face high trust interviews and/or application reviews. What's great about that is we didn't. And before, in the year prior, we were like 94% of clients, we never saw them at time of application. We never saw them during the loan process, and we never saw them at closing. It's pretty difficult to establish a relationship with your clients if you don't ever see them. I was great over the phones. I was great. But one thing I got from that call from both those guys was simply that it's so important to meet that face-to-face because that helps your annual mortgage review so much easier. That helps your mortgage coach TCA presentation so much easier. So we started meeting face-to-face. And so far, we've met face-to-face 75% of our clients that we've had this year. So I'm gonna go from 6% of clients face-to-face to 75% year to date so far. My goal is to stay over 50% of clients meeting face-to-face. That makes sense?
It does. By the way, that comes from Giuseppe. Giuseppe also in the entire Social Survey network, and I think Social Survey has about 28,000 loan officers using that platform. He tied for number one in terms of, it's a formula that's a combination of the most highest reviews. So it's the Social Survey top 100, and he was number one in 2017, and he was tied for number one in 2018. So not only is he, big producer, but he's killing it with 5-star reviews. So great advice. And I'm going to put a link to an interview with Giuseppe down below.
Yeah, and what's great about that is what I didn't understand up front. It was so important to meet them face-to-face because that it made the whole entire process so much easier, and you can truly make them a client for life. One thing, Davey, you challenged me on was you said you can't call a past client a client if they've never referred you. And that was a big mindset shift of me understanding it. It was, you got to ask yourself. So I close about 250, 300 clients every year in that range. And how many of those clients have referred me? Well, if they haven't referred me, then they haven't been a client. So I'm excited about us actually connecting next year around this time, me having a really solid, bigger number there, because I think it's very minimal right now.
Cool. By the way, that takeaway came from a Friday mastermind. Every Friday, 9 o'clock, we're doing these mastermind calls. And Michelle Town, $100 million producer, was doing a debrief on her event at her recent Darren Hardy event. And she said, I'm redefining what a past client is. And a past client, it's not just someone that I closed the loan for and I got a 5-star review. It's someone that's given me a referral. So I want to give her credit for that. So I want to wrap this up because I like to keep these as close to 20 minutes as possible. But any other things that you're going to do different in 2019? Anything else come to mind?
I've got one huge one. So we all know who Todd Duncan is, definitely legendary in the business. I went to his High Trust Academy this November in Vegas. And the biggest thing I got from Todd's seminar was this standing. And so it was, again, I never called up financial advisors, CPAs, will attorneys because I didn't know who they are. And I wasn't brave enough to ask the client. So his idea that we came through was, 2018, we had like 275 closings, somewhere in that range. Well, through there, I had my assistant go through every single file. Well, we have the tax returns on majority of those. So he was able to pull out 78 CPAs from past clients that we closed just in 2018. Then from there, he was able to also pull out 54 financial advisors that we've already closed loans for a mutual client with them. That's 132 people right off the bat. But now that my assistant's reaching out to and say, hey, Mr. CPA, we've got a mutual client, John Smith. My branch manager, Wally Elibiary, wants to set up a call with you. He just closed a mortgage loan for John Smith. And he wants to make sure that able to meet your goals on the tax returns, but also wants to make sure you have all the documentation needed so we both can provide better customer service to the client. So to me, that's a huge, easy call. And I've already had 3 calls so far today that my assistant has set up on my calendar with 2 financial advisors and 1 CPA from our past clients in 2018. So that's a really huge thing. We all get bank statements. We all get tax returns. We all get financial statements. We have it at our fingertips. I just never thought of that, and I thought that was a brilliant idea.
I love it, Wally. So Wally, I mean, this has been a great call. I want to double down on a couple things in 2019 for the community. We had an epic year of, interviews. We had over 2 million minutes of, mortgage professionals, use the Mortgage Coach YouTube channel. Think of it as like Netflix for mortgage professionals. So we increased our influence and, your connection. I want to have more interaction in our Facebook group. So please, if you're listening to this, if you have a question for Wally, put it down below. Wally, I don't know if you'd be game for it, but one of these Fridays, sometime over the next 4 to 5 weeks, I'd love to have you as a guest on our 9 o'clock call. So I'll work with you and your team to try to confirm you. And so I'm going to have Wally back if you have questions. Wally, I know you're coaching loan officers. I know you're coaching realtors. Leadership is part of your unique value prop. Where should people follow you? Anyone on this call that just wants to connect with you, what's the best way to reach out to you?
Yeah, so I'm maxed out at 5,000 friends on Facebook, and it's sad, but I'm needing to delete people. So I created something called Coach Wally. So if you go to Facebook, you'll find a Coach Wally. And what's great about that is I've taken my last 4 or 5 years from 36, 45, 80, 100 million, broken everything down how I got there. Also took how we do a mortgage coach total cost analysis. How do we market it? How do we use it for open houses? How do we use it for realtors and also clients now face to face? And I've also taken everything that you guys have heard today about the annual mortgage review. I've taken all that and broken that down, plus all the technology that we use. You go to Mortgage Coach on Facebook. I'm sorry. Yeah, if you go to Mortgage, just kidding. If you go to Coach Wally on Facebook, Coach Wally, WALLY. Yeah, nice. Then you can check that out. Plus, also, you can shoot me an email. My email address is on there, and my assistant can set up a call with you. And if there's any other further calls, we can jump on another Mortgage Coach call and/or another call.
Good. I really appreciate the interviews that you do, and then all the mentoring of mortgage coach loan officers. The industry you do, brother. You are a game changer in our community, and all the interviews I do get lots of reviews. Lots of likes. So if you got a takeaway here and you liked what we talked about, like it, and please share this with your mortgage friends. We want to create as much value and impact in 2019 as possible. So please play this forward. Ask us more questions. And Wally Elibiary, you the man, brother. Appreciate you.
Appreciate you. We'll see you soon.
Talk to you soon, man.